The question for you, I guess, is how late, and whether you're in the same camp as, say, the former New York Fed president, Mr. Dudley, that when they do lift off, they'll be lifting off a whole lot quicker as well. It's not just the beginning of the journey, it's how steep that trajectory will be as well.
So first, you're absolutely right. They are hostage to a framework that made total sense before the pandemic, when the problem was of deficient aggregate demand, and makes little sense today when the problem is on the supply side. So, the world has changed on them, and they're stuck with a framework that made sense in the past but doesn't make sense here. I don't know if I go as far as Bill Dudley goes. He is the extreme. He is that we are going to see interest rates going up. I think he said 4 or 5% is going to happen very quickly. I'm not sure I would go that far, but I'm somewhere in between. I think what you will see is a catch-up process that the market will interpret as abrupt. So they are going to try to condition the market to a very gradual QE reduction, and I think the market will accept that to begin with. And then reality is going to sink in that they should go faster.
Mohamed, what's your degree of confidence around this call, and how can we make any predictions about the future before seeing how the supply side of the economy responds September and through Q4?
John, in my career, I've been pretty certain in my mind about 3 prior calls. This is the 4th one.
That's how high your confidence level is. Go through the other 3 for us, Mohamed.
So I was pretty sure that Argentina was going to default. This was back in 1999. Of course, we had to wait till December 2001. I was pretty sure that Brazil was not going to default when the marketplace believed it would do so in October of 2002. And I was pretty sure coming out of the global financial crisis that we would end up in this new normal, whereby structural issues would frustrate high and inclusive growth. This is the 4th one. And now it's not often that I'm certain, I have to stress, I feel sure about something, but I do feel sure about this one. This inflation episode is very different from what we've had for decades now.
Lead on the experience then of the other 3 occasions, this making it 4. The question that I got asked before you came on this morning was to ask you how you reconcile your views with this bond market at the moment. How would you do that, Mohamed?
So if I was investing other people's money, I would respect the fact that the Fed is buying 120 billion of securities every single month. I would respect that. Okay, it really matters who is the big buyer, and this one in particular is price insensitive. So I would have to respect that. I would respect the liquidity wave. So I understand why the market is doing what it's doing. My concern is what the Fed doing good for the economy?